Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. Now I'm bringing you guys a video on this Saturday. I'm on the road, so you'll notice a little bit of a difference in my scenery, but bear with me here, we're still gonna get through it. In today's video, I'm gonna showcase two stocks with a really fantastically high yield of over 10% on two very affordable stocks under the $10 mark. So let's get into it. Alright guys, thanks for checking out today's video. If you're new to the channel, we appreciate having you. Hopefully you find something of value in today's video, and if you do, don't forget to smash the like button for me and consider subscribing to the channel so you can stay up to date with all of our new content. And like I said in the intro, this video is about two dividend stocks paying out over 10% in their dividend yield, and they're super affordable at under $10 a piece. I've been focusing on dividend stocks a lot lately, just in my own personal research. If you followed the dividend series that Julie started and I took over, this is something we've been doing for a while at the $50 a week range. And we are considering bumping that up to $100 a week as we go forward. So it was in thinking about doing that where I started to really start researching more dividend stocks with fairly high payouts. I'm not 100% sure either of these will make it into that dividend series. If I do put one of them in, I will certainly let you guys know. But let's look at these two stocks today so you can make a determination for yourself whether or not they're worth your money. And the article I pulled this from came straight out of the TipRanks site. And of course, it's just two dividend stocks under $10 with a 10% dividend yield. And it says that dividend stocks are the Swiss Army knives of the stock market. And I love that. So well done, whoever wrote that article. When dividend stocks go up, you make money. When they don't go up, you still make money from the dividend. So that's a fantastic ploy to get you into the dividend scene. And I've done videos in the past talking about how much of the S&P 500's growth over the last 100 years has actually been a byproduct of dividends, and it's so much more than you'd think. Alright guys, so it looks like when they started pooling this data together to determine which stocks they were going to talk about, they said, I want to look at stocks that are under $10. I want them to be super affordable for the average investor to go ahead and make a decision on whether or not they want to invest in it. I also wanted to have something other stocks don't, which is a high dividend yield, 10% or more, meaning 4 times the average dividend yield. And I wanted to have a buy rating from the analysts, okay? So other people, financial professionals, have said, yes, this stock is a buy. So the number one stock we're going to look at today is ticker symbol TWO, or Two Harbors Investments. And when it comes to looking at dividend stocks, it's natural to start with a real estate investment trust, or a REIT. And we've talked about those in the past. They have a mandate to pay out a really high percentage of their income in the form of dividends. So that is a fantastic option when you're looking for dividend stocks. Now, REITs focus their activity on the purchase, ownership, leasing, and management of real properties in the residential and commercial segments. They also, as Twin Harbors does, invests in mortgage-backed securities. So Two Harbors has built the bulk of its portfolio through investments in residential MBSs. With regards to Two Harbors' dividend policy, they say they look at 3 considerations: economic returns on the portfolio, taxable income, and sustainability of the payment. And also, as a result of those 3, it's no surprise that they did pare back their dividend payment at the height of the recession there, the little, pandemic we went through, to keep in line with what they had as far as distributable earnings. But it is back on the move upwards. Specifically, since dropping it down as low as 5 cents in April of 2020, they've raised it twice since. The current payment declared last month for the third quarter of 2021 was 17 cents per common share, or 68 cents annualized. That gives them a dividend yield rate of 10.5%, far better than the just greater than 2% found among most dividend payers in the broad stock market. And since that last pairing, they have maintained that higher dividend payment for a full year since that happened. Lastly, for Two Harbors, here is the TipRanks website showcasing the moderate buy rating with 4 analysts tracking TWO stock. They're trading at $6.51 on close of business on Friday, but check out that upside potential, guys. In the next 12 months, 11.37% upside to an average price target of $7.25. And that's not including the 10.5% yield you're getting every single quarter. Okay, our second stock on today's list is not a REIT, but it's BlackRock Capital Investments. So ticker symbol BKCC, BlackRock Capital Investments. They're a capital investment firm catering to middle market companies, offering flexible financing solutions and making available a variety of secured and unsecured loan services. So for investors, BlackRock, like other business development corporations or BDCs, aims to bring in high and reliable returns from its portfolio. Now, they've been recovering slowly from the pandemic, just like everybody else, but the company's earnings turned positive in the fourth quarter of 2020 and have remained at positive levels ever since. BlackRock finished the first half of this year with $17 million in liquid assets and $213 million in available credit, for a total of $230 million in funds available for portfolio development. Their earnings and assets support their dividend policy, which saw steady growth from 2003 all the way to 2020. It did pare back, just like everybody else during the pandemic, and they have started their uptick again with more recent and more continuous payments. The most recent of which, declared in the third quarter of 2021, was 10 cents per common share, and the 40-cent annualized rate gives it a 10.5% yield, just like our first stock of the day. Now, if you don't own BlackRock already, you just missed their most recent quarterly payment, which was on October 6th. Now, looking at the analysts rating for BKCC, there is only one analyst currently tracking this stock, and it gets a moderate buy rating. They're trading at $4.06 close of business Friday, but they have an almost 6% upside in the next 12 months to a $4.30 price target. A stock that's trading below $5 to have a 6% upside, that's still pretty good, guys. And we're completely not even talking about that 10.5% dividend yield you're gonna see every single quarter. All right, so those are the two stocks. We've got one REIT and one finance company, and I think if you're thinking about this logically with all the stocks we've talked about in the past, you can probably assume what the stock trends look like for both of these companies and try to discern for yourself whether or not that dividend or the growth is more important for your portfolio. But why not actually take a look directly at both of these stocks in a stock screener that will showcase that information? And that's exactly what TipRanks lets you do. Check this out. You can use the comparison tool to put in the two stocks you're looking at, in this instance, TWO and BKCC. So we're looking at Two Harbors and BlackRock, and it showcases their price, the price upside potential, both market caps, the yearly gains so far, the analyst consensus, and the SMART score all up top. But then you can take a look at the performance comparison from as far back as December 2019 to current to determine how those stocks have performed in the past, if that's the type of analysis you like to do before investing your money in any given stock. Obviously, in this case, you're looking at BlackRock having a more successful period during that time frame, but they do seem to be almost mirroring each other there. Nonetheless, you're getting 10.5% dividend yield from both companies and some decent growth in the last year, 32.59 for Two and 70.59 for BlackRock. They have definitely picked up things a little bit faster than Two Harbors coming out of the pandemic. All right, guys, that's it for me on today's dividend video. I'm on the Eastern Standard Time right now, so we're approaching 5 o'clock. It's definitely dinner time. I don't have any brews here in the room to give you guys a cheers or a bottoms up, so I gotta finish this, knock it out, put it out for you guys to see, and then I'll go have a beer, I promise. Until next time, thanks for checking out today's video. Take it easy.